Doing that now.
And we're live. Good morning, everybody. Happy Monday. Hope everybody had a good weekend. Can somebody give me a quick mic check? Steve, how you doing this morning?
Man, I'm doing pretty good. I really can't complain at all.
All right.
Got my coffee in hand. I'm always ready to go Monday mornings, man.
Damien says mics are good. Luther says it's all good. Always good to go on Monday. Well, cool. Tell us what you see in the market this morning, brother.
All right. Do you mind taking our faces off so I can blow this up a little bit?
You want full screen?
Want full screen, baby.
All right. There's full screen.
All right. So let's start with the Nasdaq real quick right here. Oops, let me kind of blow this up, see if I can get this just a little bit bigger. So we got the Nasdaq right here. And, I've been talking about the last several days or so. We had a nice, the technical picture for the overall market is looking a ton better, right? We were in a correction. We got close to the 200-day moving average. We bounced back out. Now we're back above the 50-day moving average. So we don't know, and it's funny because this little inverse head and shoulders right here looks almost identical to this one right here. All right. So we don't know if the market's going to do this or if it's going to keep going up. But it does seem reasonable that to give this pattern a little overall balance, right? You kind of got a cup. It does seem reasonable that we get a little handle in the market. Just maybe a week or so of quiet time, maybe a little pullback, just something to really set up the handle or to set up the bull flag so we can resume our uptrend and hopefully get a Santa Claus rally, even though we're a couple months out from that. But usually, almost always in November, December, I'm looking for bullish setups because it just seems like, that's just a really strong time for the market. So I'm always looking at the glass half full, unless it's just absolutely selling off. But this is kind of what I'm anticipating right now. Just kind of a little zigzag. Hopefully, a multi-day kind of drift back, quiet, nice and easy. You do have the 20-day that's curling up, and it's right at the 50-day moving average. So this pink line is about to cross back above the orange line, which is the 50-day moving average. So you got the 20 and the 50 support. I believe under reasonable circumstances, this should hold. Obviously, we are in a news-driven market like we always are, but that doesn't mean trade off the news, right? Trade off the charts, because everything that's in the news will be on the chart no matter what. So you don't even have to decipher that. And you can kind of see right here, the S&P 500 is a little bit stronger, and that's because it's a little bit more diversified of an index. It has, value-oriented industries such as energy, such as banks, financial stuff like that, where the Nasdaq really doesn't. But you can see right here, I just wouldn't be surprised if we kind of get a drift back. So I'm kind of anticipating that. But again, I'm pretty invested right now, and I think it pays to be. And I really started to get invested kind of right around here, and so far that was looking right. We don't know what is going to happen, if this is just going to roll over or if this is going to continue to have a nice multi-month rally. It doesn't matter. We have rules. We're going to follow them. One piece of advice I would give you is make a trade plan. Always, you want to pay attention to the overall market, but when it comes to selling stocks, right, make a trade. Don't sell all your stocks just in case the market pulls back or corrects or something like that, because you might have some really strong stocks that are holding up. Have an individual trade plan for each individual stock, because if you go and sell your whole portfolio every time the market's going to come under pressure, that's a money losing strategy, right? Because most of the time the market comes right back and you have to start all over. So it's just really a few things to think about. One thing I'm into, I'm going to pull this up on another screen. If you just give me 1 second, we can take a look at the overall market breadth to really see what is. Excuse me. Let me see is it possible for me to blow this up a little bit. Okay. So you have the percent of stocks in the S&P 500 that are above the 20-day moving average. So we went from a few weeks ago to 13% of the stocks in the S&P 500 above the 20-day EMA. So now we have 80%. So what that means is out of the 500 stocks, 400 are in rally mode. Okay, so we need to pay attention. That's enough. It's a short-term broad participation, but so far that looks pretty good. We can scroll down here and you can see the XLK technology, 82%. That's pretty strong. Financials, 95%. That might be one of the strongest. So financials are looking good. Consumer discretionary is at 58%. So that's underperforming right now. You have industrial at 83%. That's pretty strong, but so far financials are the strongest. And you have healthcare, which has kind of shot straight up, but still at 84%. That's kind of in line with the market. And staples at 65%. And then you have the XLE at 95%. So, and then materials at 82, and then utilities at 89. So really you have energy, the XLE, right? The percent of stocks in the XLE that are above the 20-day EMA at 95%. And then you got financials. So that just goes to show you where financials right here at 95%. So even though the energy and banks have really made a run, they still in the short term seem to be the strongest. Now I am looking for other pockets that could potentially pop up, because a lot of the banks and a lot of the energy stuff is extended, right? You don't want to chase it halfway into a rally or deep into a rally unless you use a really tight stop, or unless you find a really good point to get in. And I'm going to show you, we're going to look at some things. Excuse me. We're going to look at a few things, and let's just kind of go and see, as far as you can just run the ETF scanner real quick just to see what is popping, right? You have UNG is popping pretty strongly. You can see it bounce off the 50-day moving average. That would have been the ideal entry. And now it's up quite a bit. I'll probably wait for it to do something like this, because right now I think it's more than 10% above support. Yes, 14% above support. I like to buy within 10 because that's where I use the stop loss at. And we'll just go through really a couple of these, and then there's some other ones I want to look at. The Bitcoin trust, cryptos are really strong right now in a nice uptrend after looking pretty bearish, right? I thought this was going to break down. And then, multiple back-to-back strong days. I mean, it completely changed my mind. I really hopped back in. So, again, this is in an uptrend, a little bit extended. Sometimes the trick is to try to find stocks that are not extended, right? Especially when the rally has already taken shape. URA is extended right here. I told you I own some. I sold half at 8%, and it got really close to triggering me out, and it didn't. And I'm still in, and it's popping this morning. I'm just going to kind of wait and see right here. I have my stop loss like somewhere probably around here. Already booked partial profits. But again, I know these are sectors and investments that we've talked about a lot lately. But I think it's very important, even though these aren't in buy range now, that I show you, like, hey, if this is too far above support, let's just chill out for a minute. It will give us another opportunity, just like UNG did, right? UNG, it started going high. This was the opportunity right here. And then it pulled all the way back to right here. This was the opportunity right here. Yes, I missed this last week. But, I always like to see kind of what is popping, right, coming out the gates. And I'm seeing a lot of commodities, right, energy, and you have a lot of emerging markets in there, right? There's a really inflation type of investments, right? Emerging markets really do good, right, in kind of a little bit more inflationary environment. But, silver miners, I'm kind of been watching this a little bit, and I've talked about this. It really broke out of a downtrend right here, but I'm still waiting for kind of that first pullback, and it might bump up against the 200-day moving average and pull back and kind of create that first kind of little mini pullback and breakout. So that's what I'm waiting on. It might not ever come to me, but usually when I'm patient, good things happen. So let's talk about, I want to go through the list I really intended to go through today. And I want to talk about Riot. Riot, I slapped a buy rating on last week. And what it did was it got in the 29 area. It quickly hit an 8 to 10% target, and then it pulled back. So I think I bought it on this day, which was the Friday before. I hit a 10% target. It went up a little more. So when I hit a target, I'm going to sell half and raise my stop to break even. So I sold half and raised my stop to break even, and I got stopped out for a 5% gain. No big deal. There are no rules to say you can't buy something back, right? We have rules in place, even though sometimes they can whipsaw you out, to avoid something catastrophic happening, right? Sometimes you'll make a little, sometimes you'll lose a little, sometimes you'll make a lot. But if you use stop losses, you should never lose a lot, okay? So why I actually still like this and why I'm considering buying it back is because it pulled back, right? It tried to move above the 50-day moving average, and it really pulled back, and it found support at the 20-day moving average. Look at all this volume. Now, why is that significant? It is pretty common for when something is trying to bust through a resistance, right, or a major moving average for the first time in weeks or months. A lot of times it'll poke its head above, and then it'll come down, and it'll find support at the next one under, right? Look at this. Right here is a perfect example. Like it kept trying to bump its head above the 50-day moving average. It pulled back. It found support at the 20-day moving average and then punched right through. So that's kind of what I'm hoping is happening now. So I'm considering buying this back today with the stop loss under Friday, and to give myself, another opportunity to see if this can really, really get out of here and really, really break out. Crypto is strong, and I'm seeing this set up in Riot. I played it once, I made some money, and I'm really looking to play it again. So I think, to me, this one right here, Riot, is looking good with the stop loss under Friday's low. All right, now, when you're dealing with anything crypto or blockchain or anything like that, as always, kind of do your own research, make your own trading decisions. Always use stop losses, and understand that when you're dealing with a volatile investment like this, a lot of times if it goes against you, it can gap down past your stop loss. And that's just the risk you're going to have to take when you're dealing with more volatile trades like this, okay? But to me, that setup kind of looks right. Another one I've been talking about is KWEB, KWEB, and these are the Chinese internet ETF, the Chinese internet stocks. Way, way down. That doesn't mean it can't go down further, but it really has built kind of a nice inverse head. You got the head, the shoulders are really a neckline right here. So I told y'all last week that if it breaks above this high right here, right, that's an entry. And then it broke above that on Wednesday or Tuesday. So it's still in buy range really right here. So this, to me, it has, anytime you're trying to pick a reversal from a bear market, let me be clear about that. Anytime you're trying to pick a bear market reversal, the failure rate is the win ratio is a little lower, right? Because you have a higher risk, but the upside is greater. And when I look at this, I'm like, okay, I'm already up. This to me looks pretty good, right? And if you haven't gotten in, then that's okay. You can always buy it as it moves above Friday's high, because Friday it got hit. If you want to play the conservative route and let it really break through this neckline, okay? To me, it's still in buy range right now with just a stop loss under the 50-day moving average. So you're risking about 8%. And in my opinion, I mean, it could really get up into the 63, 64 area. Granted, no worse news about the Chinese real estate market comes out. And that's another thing. It's just, this is a very headline news instrument. And that's why I don't trade a lot of individual Chinese stocks. I have to put it in a basket of ETF or an ETF, a basket of stocks. So, but to me, this is looking pretty right that it wants to rally, given the market holds up and given the Chinese real estate market holds up. Another one I want to put back on the watch list is TAN, the solar ETF. And the reason I'm a little bit more heavy on ETFs this morning than stocks is because, like, a lot of the stocks I was looking at they're all about to report earnings in the next week or two. And I don't like to buy stuff that's reported, that's going to report within the next 2 weeks. I prefer to just wait. But the good thing about, Queb and TAN, a lot of these ETFs, they can really, really move, so they can trade like a stock. So if I'm going to go eat the ETF route, I want it to be a very, very aggressive ETF. So, but you can see right here that it poked its head above the 200-day moving average last week. It's kind of drifting back. And, there's news coming out of Washington yesterday that they're closer to some kind of deal, infrastructure, whatever. I really think that if that happens, you want to be positioned in some clean energy. All right. So it's just kind of something to keep in mind that to me, this looks good. If you want to be the more conservative approach, right, this looks good right here with the stop under Friday's low of 87.59. If you want to use a really tight stop, I mean, that's like 3 or 4%. If you want to take the more aggressive approach, you could let it break above last week's high, which would also really, really break above this neckline. So right here, you got a neckline, you got a inverse head and shoulders. I mean, that's pretty clear to me. So if you wanted to wait till it break above the neckline, it's funny how a lot of these more aggressive industries like Chinese internet stocks, a lot of the more growth oriented industries really, I mean, they kind of all look the same, right? They've all have done absolutely nothing or gotten slaughtered since February, even though the market's gone up, and they're creating this major bottoming pattern, right? And this right here was really the Biden hype, right? That he would, do a bunch of clean energy stuff. And then this is probably the reality that so far nothing has gotten done. But I think there's kind of hope creeping in a little bit. So, if this breaks out, I really think it's game on for clean energy. So I still like Queb. I still like TAN. I still like Riot. And at the moment, I only own Queb, but I'm considering buying Riot. So this was an ETF that I owned and sold it, right? It looks like prematurely, but this is kind of a great opportunity to potentially buy it back. And I'm considering that as well. So when you have something that can be in parabolic, right? Can be in parabolic mode, like crypto, clean energy, Chinese internet stocks, like they all have in any commodities, right? They have this parabolic nature to them, which means every now and then they can just absolutely take off, due to supply demand issues, due to speculation. Doesn't really matter why. But, this is looking pretty dang good right here. There's probably a more liquid ETF. I think it was the IEZ. Yeah. Well, none of them are really that liquid. Let me find one in here because the IEO was the one that I traded. Probably the Nat Gas would actually probably be the better one to go because Nat Gas has outperformed oil. And look, it took a pause. It took a very, very brief pause, a multi-week pause, and it's breaking out again. So for something like this on the individual stocks, you could always buy with a stop under Friday's low, right? So you're probably risking about 5-6%. And I would probably book profits a little bit more actively on FCG. And the reason why I would do that is because it didn't really have a good consolidation that lasts very long. So a lot of times you have to almost anticipate when something makes a big move, it's going to make a longer consolidation. So this was a very, very short consolidation, but this to me looks rather, rather interesting for another leg up. So I'll kind of recap. Riot, to me, all these are assuming the market holds up. If the market doesn't hold up, you can forget about it. So to me, Riot looks good with the stop loss under Friday's low. Queb looks good, but if you want to be a little bit more conservative, you can wait till it breaks out above Friday's high. And right here, again, if you want to be more conservative, you can wait till it breaks above this neckline of about $93, $94. or you can go ahead and get in early. It's outperforming quite a bit today with the stop loss under Friday's low. And FCG, this looks like it's getting a little steep. I actually might see if it comes back and touches the 5 or the 8-day moving average, but this is really popping, and I think just in the last few minutes it's getting a lot stronger. So I might wait, see if this has an intraday pullback a little bit, try to get a little closer, maybe under 19 bucks. I would feel a little better with the stop loss under last week's low, right? But I would probably book profits, on this one much quicker. So right now, that's really all I have. It's just a handful of actionable items on the watch list, all very aggressive names. So you need to keep that in mind. Also, always make sure, you're comfortable with any trades, do your own research, make your own decisions, use stop losses.
Hey, Steve, we had a question earlier. So you're on stock charts right now.
No, I'm on MarketSmith.
Oh, you're on MarketSmith right now. Is that where you had the list of the percent of stocks over their 20 SMA?
Yeah, here. This is stock charts. Yep.
Gotcha. So Lou is asking where he could find these or get these.
Well, here, let me. If you
can we save that list?
Oh yeah, I know it's already saved. Can I drop this in the chat box?
That's a great question.
Doesn't let me openly chat. But
I don't think you can in the chat box. I don't think we could drop attachments. But here's what I could do. Anybody if you could send me that list, Steve, can you do that?
Yeah, and take a screenshot, or you could take a screenshot of this right here with your phone. But yeah, Ben, I could send this to you.
Is that a link or is it?
Yeah, this is just a link. This is a link. You copy this link and open it up in any browser, and it'll open up. If you have a stock charts account, you can save it. That way, it's always updating for you.
If you don't have a stock charts account, is there a downloadable version?
That's actually a really good question. I'm not sure. I would assume if you don't have a stock charts account, this link would probably still update if you wanted to bookmark it, because it lets me send it to people that, I put these in my emails all the time, these stock lists, and not everybody has stock charts. So I would assume you could save it regardless.
Yeah, because you can have a free account with stock charts, right?
You can, but the free version doesn't allow you to scan or save charts.
Gotcha. So you could drop that link to me.
Correct.
Okay. Damien asked if we will send out trade alerts during the day. Damien, if you're talking about for this Monday Movers show, we won't send out these trade alerts unless one of them makes the weekly reversal trade, which, how do you explain that, Steve?
Yeah, so it's a good question. So I already sent out, this morning's really idea, and I'm waiting for it to trigger. So if you go back and check your inbox, you'll see what stock or what ETF I'm really looking at, and I'm waiting to trigger for above a certain level. And if it doesn't trigger above that level in the next day or two, I might just send a completely different alert. So just go check your email, and when there's an official alert, you'll always know.
Okay.
Then I just emailed that to you, so you should be good there. Anything else?
Not for me, Steve, but thank you.
Yeah. No, I like the Monday morning. You kind of try to make it short, sweet, give you a nice actionable watch list to really look at. So,
yeah, you got a few trade ideas to work with.
Market's looking good. You have to look at it half full right now. The market's looking good. I'm not waiting for the bottom to fall out. That's a tough way to live. Trust me. I used to do that.
I'm gonna try to just put this in the chat box and see if that, Damien, Lou, see if that works for you.
Oh yeah, that's perfect.
Probably have to copy and paste it out of there.
Yeah. But yeah, and that's also brings up a great question. If you ever see a chart on stock charts, that I can always send you a link if I have some indicators that I look at from time to time. So you should be able to bookmark that, Damien, and let me know if you're not a member, and let me know if it's constantly updating on a daily basis. I think it will, even if you're not a member. But if you want to make any edits to it or anything like that, or save it to a chart list, then yes, you have to be a member.
Damien, you saying that link that I just dropped works fine?
Yeah.
Because for some reason it popped back an error message on me, but if Damien can see it, I assume everybody can. Okay.
All right, guys, girls, thank you very much. I hope everybody has a wonderful week. If you have any questions, you can always email us at support@thetradersplan.com. As always, right, just pay attention to the market, take it day by day, and we'll see you next time.
Yep. All right. Thanks, Steve. Thanks, everybody.
So, yeah.